Welcome back to another interview. Today, we have the pleasure of welcoming a new company to the channel, Stack Capital, and we have the CEO here with us, Jeff. Hi, Jeff. How are you?
Good, thanks. How are you?
I'm good, thank you. And I had the pleasure of getting to know your company a little bit before we actually recorded. So this one's exciting for me because you have some pretty cool companies in your portfolio. So could you please, at a high level, describe who Stack Capital is and how long you've been involved?
Yeah, so I've been involved now. We started this business around 3.5 years ago. I used to be on the hedge fund side of the business there for 10 years plus. I started to see like more opportunities in private market trading. I was like, wow, like this is pretty darn interesting. Like you can get exposure to SpaceX, you can get exposure to Canva, you can get exposure to Palantir when it was a private company. I was like, okay, let's how can we build the business around this? And we were on the fund side, but we needed the right structure to invest in privates, and that's when Stack Capital was born. We raised some capital with some backing from some big institutional investors, pensions, family offices, and individuals, and we built this so that anybody can get exposure into private companies. So yeah, we started that around 3.5 years ago, and we've been doing pretty well since.
So, Jeff, what really excited me about your deck was I saw your portfolio holdings in a nice little pie chart. I'm like, well, this looks like a balanced portfolio, but they're with pretty cool companies. And the one that stuck out to me was SpaceX. It's your biggest holding. And I'm like, wow, this is like really timely. I remember hearing the pitch and I'm like, this is pretty cool. I didn't even know you could invest in SpaceX. So now there's a public instrument for a Canadian to buy. So well, I want to touch a bit more on the structure of your ticker, which is STCK. You should find that at the top of the video here if you're looking after. But like, why SpaceX? And like, how did you find the company? How did you actually manage to invest in it? Because like, this is hard. If people Google like how to buy SpaceX, like there's like one or two other instruments. Why is it so hard? And why did you choose SpaceX?
It is extremely difficult to buy shares in that underlying company and get exposure there. Like it's one of the top, it is the top private company that people want exposure to right now. Like when you have a business that has two monopolies in one, you can't
Mhm.
find it anywhere. Plus, the guy's like kind of like the co-president of the United States right now, which that kind of helps out the situation for us. But what drew us to, and this before we even like launched that, like that was a name that like all of us in the background are like, wow, like they're bringing 90% of the cargo that goes up into space goes on a SpaceX rocket.
Mhm.
Like it's wild. Nobody can touch them on that. And back in
Mhm.
2014, they were able to launch a rocket up in the air, rebring that back down, so you can reuse around 65-75% of that fuselage, which every launch that you do brings the cost down. So
Mhm.
fantastic business from that side. And then the other part to the business that they wanted to do was build the whole Starlink side of the business. So Starlink, if people have like a cabin or a cottage somewhere, you try and go there and you're not going to get access to internet. It's going to be terrible. And if you do, maybe you get like one bar or like you can maybe like buffer a Netflix video. It's going to take you an hour to get it done.
Mhm.
So they've built that underlying platform where there's more than 5 million people who have signed up. Businesses, sticky, steady, growing underlying business. Like you can't find stuff like this, and nobody else has a satellite constellation like that he's been able to build out there. So
Mhm.
having that launch business with the Starlink side of the business, it is an unbelievable business to invest in. Like again, like I said before, extremely difficult to get invested. And
Mhm.
that's why for people who invest in Stack, like that's our biggest weight in the portfolio. So you get exposure to that company.
Mhm. So part of what I like too, just as a sidebar, because I'm a bit of a tech nerd. So if I start talking fast or if I stutter, it's because honestly, I just really enjoy this stuff. So I'm happy to connect. With Apple, they've actually announced that they're going to use Starlink as a we're going to let them in now because they couldn't figure out on their own. They're like, oh, okay, I guess that Starlink's good enough. I guess they helped North Carolina. Trump's talking about it. I guess we'll let them in. So to segue that into a question here. So part of what I didn't know as someone like who might be a little bit more sophisticated retail investor, I thought, okay, well, it's nice to hear about SpaceX, nice to see the headlines. I'm never going to be able to buy it. So what's the point in trying to dig in? But then I'm like, whoa, well, they got one cool company. Okay, I know that one. But then as we go through the interview, we're going to get introduced to more companies. Some I'm familiar with, some I'm not. But my next question here is, oftentimes when I'm doing my YouTube videos, I'm talking about IPOs being liquidity events. So could you describe to me how Stack Capital actually gets liquidity and how IPOs might be beneficial to the company?
Yeah, this is the big thing, and I saw this on even being like a hedge fund, not even just a retail investor. You could never get access into these underlying IPOs. Like if you look at the stock market and you see that big shiny IPO and it's up like 50, 60, 70% on day one, no one's getting an allocation of that stuff. It's like 90% of the allocation goes to the top 10 biggest commission generators to those underlying firms. So it's like how's the average retail investor, how's even a hedge fund or family office supposed to get an allocation onto those underlying IPOs? So what we did is we sat there and said, okay, let's buy these companies in the private market first. Like the last like 1 to 2 series before these companies go public, that's where we want to get in. So call it like 6 to 36 months. And then when the company goes public, that's when we have free trading shares. And hopefully you bought this company below where they priced the IPO. And then hopefully the IPO trades up on day one and continues on trading up. And then we can exit our position over time. And then we recycle that right back into the private market.
Mm,
We at Stack Capital give you a value add of we give you exposure to private companies. That's what we want to do. Once it goes
okay.
public, anybody can point and shoot. They get access into it. We want to give you that exposure to those private
Okay.
companies.
So Jeff, let me repeat back what I heard and you'll correct me if I'm wrong, because
Yep.
sometimes the audience has questions and they don't ask. A lot of them are men, so they
Yep.
don't ask for help when they need it. Okay. So what I heard was that when we IPO, so a lot of times you'll see the IPO price, but that's not the book value. A lot of times they'll massage it higher. It'll go higher because it's oversubscribed. There's a lot of demand. And the benefit for retail traders here is that that's actually when we're selling. So if we own the underlying stock, whatever the negotiated public price is, that's where we can generate some liquidity. That's a chance to get out with founders, with original shareholders, with everybody else. And just like S&P 500, we can take that existing cash and rebalance it into new opportunities. It's like a circle. It's an ever-feeding circle that can just repeat and repeat and repeat. So by owning the one stock, again, in this case, STCK, you're going out to find private companies that are hard to get access to. And then through that process, again, I want to talk a bit more about that process, but when the IPO happens, that's actually a good thing for us. And then we have the option to sell, we have the option to rebalance. But you're keeping that window in mind when you're doing your screening process. Would that be a good way to think about it?
Exactly. Once those companies go public, you've increased that value for the underlying shareholders, and then we recycle that capital right back into the private market. You're exactly right.
Perfect. So, as we know, sometimes investing doesn't always go according to plan. So, let's pretend for a second that you're looking at a story because, like, you have a balanced portfolio of like how many stocks are in your portfolio right now?
We have around 8 to 9 in the portfolio right now. Total that we would go to is kind of like, call it like 15 is kind of like the max number. We don't want to be too diversified. We want to sit there
Mhm.
and put a name in there. And it's like, okay, if that worked, you see that working in your portfolio, not just, hey, you get a 1% weight in there. And it's like, okay, well, that doubled or
Okay.
tripled didn't do too much for you.
Okay. So before we go further, I'll repeat back one more time because this helps me. Oftentimes people think they hear what others do, but they don't interpret what you think you heard. So the part that I heard there was that um, sorry, I had a brain fart as I was trying to say that I'm smart.
No, it's so yeah. So in the portfolio, just in
Oh yeah,
terms of
sorry.
names, you're
I
asking
remember
how
now.
many names were in the portfolio. Yeah, we have around like eight to nine names within the portfolio, underlying portfolio.
So the benefit we're getting from being in Stack Capital too is that there's risk management, meaning a balanced portfolio means that we're not going to have 100 best ideas, but we're also not going to be so dense in one or two as much as we love SpaceX that it's going to be able to hurt us really bad. So expect the best, be prepared for the worst, and ready for a surprise. So before we talk about the companies you do own, maybe we could talk about a big boy because this is the one that I was personally curious on, Stripe. So fantastic company. Why don't you own it?
Fantastic company. It's one that we've kept our eye on. In terms of like valuation, that was the hard part for us to wrap our heads around. When it was trading in the private market back in the day, it was 90 billion. The individuals traded that all the way up to 150 billion. Then you had that great tech reset where tech all of a sudden collapsed and those private shares, they came all the way down to around like 40, 50 billion. So we were looking at it, but we just couldn't wrap our heads around the valuation of the underlying company. It's one of those businesses that we're constantly reassessing. And at one point, it could make it into the portfolio because at the end of the day, that is a very, very good underlying business. It's just trying to wrap our head around the valuation and the potential
Mm.
upside.
Okay, so a lot of what I'm liking here, my audience should like too, is that you're echoing a lot of what I advocate for. So risk management, know what to do before you buy, and in this case here, like we have to know whether or not. So the saying I like to use is, fundamentals tell us what go on the watch list. technicals tell us when to buy and sell. So technically, is a stock overvalued? Is it undervalued? Is in that right window or sweet spot for us? So as much as I might love Tesla, the company sometimes the stock is overpriced. Sometimes it's underpriced. My job as the investor is to try to determine the difference. That's a single stock picker. I build my portfolio, and I also know that if it's again roughly 10 to 15 names, if they're equally weighted or roughly there, not one name can make my portfolio go mega big up, but it's also not going to crush my account. And that's what a lot of retail traders might find out, where it's hot when it works, but the second it doesn't, being all in is not really a good proposition. It can really burn you. So that's part of what you learn by working at the hedge fund, and you've applied that to the company, right?
Exactly. We do our due diligence on these underlying names. And sometimes additionally too, like if we can't get the access to information that we need to make an assessment of that company, we're not going to put our capital in the underlying company. So we really need to make sure that we have all the information that we're working with, and it has to be the right valuation for us to sit there and say, we want to put our capital, we like that business, we think we're going to make a very good return for underlying shareholders. All of those need to come together for us to put our capital into a business.
Okay. So could you tell me where Stack Capital comes from?
We had a lot of names when we were coming up with the business, and thank goodness there was a few that we didn't pick. And Stack was one that stood out because ultimately what you're doing is you're constantly looking through the capital stack. And what I mean by that for your listeners is when private businesses are raising money, they're raising a Series A, a Series B, a Series C, a Series D, and continue on. Who knows what letter it goes to? But each one of those series represents a portion in the capital stack of the company that we're constantly combing through and looking for the best opportunity because there's different bells and whistles on those Series A or Series B or Series C. So it
Hmm.
takes a lot of work and a lot of due diligence from us. So it's looking at that capital stack of where that name came from.
Okay. So now that we've talked about a lot of companies you don't like, maybe like really briefly, you could pick a company you like, describe when you heard about it, and then how it became a portfolio holding.
So one of the companies where we heard about it, we have an advisor who he was one of the first seed checks into a company called Canva. Design software, one of the best companies in the world in terms of financial metrics, monthly active users. So we had originally looked at it, and this was kind of the height of like the tech boom, where it was around a $40 billion valuation that we originally looked at it. And we're like, man, we love this business. The operators, the co-founders of the business, fantastic, had a beautiful business. We just couldn't wrap our head around the valuation as to where they were at that point in time in the business. And 2 years later, fast forward, the company was doing a tender offer to give some liquidity to some of its shareholders and some of its early investors. Now, the valuation at that point in time was less, and we really liked it at that point in time because they had grown into that valuation. We're like, wow,
Mm,
we had that established relationship with them, had very good connectivity into the company, and we sat there and said, "This is a really good valuation to put capital in." And we almost had like a scorecard of them over the last 2 to 3 years of what we were tracking. So we were
mm,
extremely excited to be able to put capital in at that point in time. Subsequent to then, the company has done some upticks in valuation, which are very nice for our shareholders.
mm. So I've heard about Canva. Maybe some audience members have as well. What I really like about them is that they're basically Photoshop for the average boomer, right? That's the way that I try to explain it. Where if you're on your phone, Photoshop works, but like it's not easy. It's for pros. So for people who are layman's and they have a really good freemium model, like they honestly they just have a product that once you use it, you want to use it more, and it's convenient. You're happy to pay. So I love Canva personally. So if people are thinking of companies they want to they see and they know there might be some in your portfolio. But maybe what are some like that are maybe less known? Because honestly, I consider myself like I run a tech company. I'm a founder of a tech company. When I look through your portfolio, I'm like, oh, I'm actually learning some stuff here because there's some companies I might have heard of. There's some companies I've done some research on, but there's some that I've never heard of. So
So
like, who are
yeah,
some of those new ones?
I can give an example of two different ones, both in the robotics area. So there's a company that we own a decent sized weight in as well called Locus Robotics. They
Mm,
have robots that go along 3PL facilities. So a 3PL facility is a third party logistics. So think about UPS, FedEx, DHL. And a lot of people in there, like you're walking 25K in a day, taking an item off one shelf and another shelf, putting it into a cart, packing up and send it out. A lot of people don't want to go into those jobs, right? If you're in a warehouse in Canada, it's too cold. If you're in a warehouse in Texas, it's too hot, right? So what can they help alleviate the alleviate the jobs of some of these individuals. It's to put a robot in some of those facilities. So they're able to put these robots in these facilities, make them more efficient of getting product out there, and also take their labor costs down, which is extremely helpful to the UPSs, the DHLs, and the FedExes of the world. So
Mm,
that would be a robotics business that these guys were born out of like MIT, fantastic underlying business. Another one just to speak of and highlight would be a company called Shield AI. Shield
mm,
AI is a US defense contractor. They have two divisions. They have a drone division where they do a lot of reconnaissance. CEO is an ex-Navy SEAL. He's built a beautiful business. So on that reconnaissance, they'll use these drones where they'll fly over the coast of Florida looking for speedboats that are coming in with drugs from like the cartels. Very, very interesting operation. And then on the second portion of that business is a software that they have called HiveMind. And HiveMind is a software where they put it on planes, and those planes can now fly themselves. And
mm.
they put them up against human pilots, and the trials show that the AI pilots are extremely beneficial to the U.S. military.
Hmm. So I've heard of Shield AI, and I think there might be some founders who were like some people in the company who might be involved with other public companies who might be fairly big, and it's one that might be worth looking into. So, um, Jeff, this all sounds a little bit too good to be true. So what I was told when I was growing up is like, hey, if something sounds too good to be true, it probably is. So if this sounds so easy, and it sounds like it's just a cash machine that we can stack capital on top of each other and recycle it like a washing machine, why is no one else doing this?
It is an extremely hard entity to set up, to bring it in the public, to bring it into a public domain. And a lot of guys, a lot of like big funds, like the PE and VC guys down in Silicon Valley, they just basically keep it to like the rich elite. So they'll sit there and say, hey, only for accredited investors, not going on a public exchange. We're just doing this for like the select few people that we want to give access to. For us, we could have gone that route. But we have so many friends, family members, where like if you're not an accredited investor and you can't just go buy one of these in the private market, then how are you supposed to take advantage of the value creation that happens on these companies? And a lot of these businesses are staying private longer and longer and longer. So we wanted to create a tool that anybody could just go point shoot, they can buy, they can have that in their portfolio, and it's easy for them to get access into. So we'll do all the due diligence, we'll figure out these underlying portfolio companies to put in there, and these other people can actually get access into this stuff in a public manner.
Hmm. So I think the other part that, like when you're really close to your story, sometimes you don't fully appreciate what your unique value proposition is. So I think part of this is your connections. When you pick up the phone, or sorry, when you pick the phone up and you call somebody, they might actually answer. Or when you say, "Hey, can I have some of that hot commodity, the Tesla stock or the SpaceX stock?" Sorry, they're like, you know what? Yeah, we do. We can help you with that because I'm guessing that this is oversubscribed. So getting any allocation in one name might be hard, but replicating the business model where you are expecting to have deal flow. It's not going to sit in cash because I'm not giving you money to hold cash.
Yep.
And I think right now, because there's not very many IPOs happening, a lot of companies are staying private for longer. I was reading recently that it's up to 40 years now before they actually IPO from the time they hit unicorn status. So it's getting longer to go to IPO. There's more funds available in the private markets, which means that we're getting priced out when the stock finally IPOs, it's like, well, is it fully priced? Is it price for perfection? It kind of is. That's why it's going public. Um, that's the way a lot of companies operate. So I see this as a replicable process. So in the spirit of thinking about what could go right, what could go wrong, what could go wrong, like in a situation like this, if we're trying to be mindful of the holistic view.
Yeah, the things that can go wrong are if we pick the wrong valuation that we're buying these underlying businesses at, and we're not perfect. We're never going to bat 1,000. So there's going to be portfolio companies that they don't work out, and we might have to mark those down because we bought them at too high of a valuation. The biggest thing for us, because we play these late stage companies, they're never going out of business. We're not looking at businesses where it's just like this was a cloud diagram on a chalkboard. We gave them money and like who knows what happened to it. These are established late stage companies that should look to IPO or maybe they get acquired by another larger player, but it's more so the valuation that we're buying them at. That's what you
Mm.
have to be cognizant about, and that's where you have to have trust in a management team like us to do the right thing and buy the right companies. Case in point, why we have such a large insider ownership here, and we consistently buy more stock on a consistent basis.
Hmm. So my last question for you before I leave you with like what investors can look forward to is what I where I find I have success is when I invest in what I understand. So I might really like SpaceX. I might want to invest in it. Can I really do the research? No, to go know like which one's the winner, which one's the loser. Like I use these products, but like there's a business model behind it. Some great products have a terrible business. So how's a company going to make money? I mean, that's where again, like I like innovative tech like this, but I think for me to go build my own private equity portfolio would be pretty hard. So I can again allocate a portion of my portfolio into something like this, or I can see if it matches my investment criteria. But like, what would be some of the other upsides for the average retail investor to who might be like, we'll call it tech curious in private equity, but they don't really know what to do. Like, what can we help them with as a stepping stone?
In terms of helping them, like what does
Just
Stack help
understanding
them
like
with?
the process like why are like public private companies before they go public, like who are some of those, like I'm basically telling them to go read your deck, because like there's companies in there that as someone who feels like he's sophisticated, there's companies I don't know, meaning if I went to those sites and I liked them, I might have a product I can use today and get benefit from it. So this research process is actually beneficial, not just to my investment process, but if I like tech stocks and I like venture, this might be a good way for me to go get exposed to it, like to the private equity stuff.
Yeah, I think a lot of people like for additional color from like us as to like what we can provide to these people. Like the great thing with us is on our website. Like so you obviously have our presentation where you can go through there. We give a lot of information as to like why we like these stocks, what stocks are in our portfolio, what is the margin of safety that's up and above and beyond that we can give than just a regular individual stock
Mm.
and buying. Additionally, too, we give write-ups of all the portfolio companies as to like why did we buy that? So you can see what our thinking was of this is the reason that we bought that. Additionally,
Mm.
on our newsletter too, if you sign up for our newsletter, you can sit there. We give it's kind of like once a month, could be once every 2 months. We give updates on those portfolio companies from like just different pieces that are written out there, whether it's the Wall Street Journal, whether it's Bloomberg, whatever it might be. We curate that and give that content out to our investors so that they can constantly keep up to date on those underlying portfolios as to what is going on there.
Okay, so I'll repeat it back because I was trying to give you a slot. It was basically saying if you don't know how to do research on a company, or if you're like, oh, the idea of a balanced portfolio is nice, but I don't really know what that looks like. Well, again, you can go back in the company, look over time, see why they pick these companies, see what the weighting is, see how they go through the screening process, see when one goes when it goes public, how the money comes back in, how it gets redeployed for later. If they're looking to raise new money, how do they choose what to put it into? Is it sprinkling it into existing names? Is it going
Yeah.
into a new opportunity? That's part of the portfolio structure and part of the risk management, because a lot of retail investors they like the idea of stocks, but when it comes to managing the risk, that's what's really hard. And that's what I was trying to say is that there's a whole process. It's not just like, oh, we like SpaceX and we're gonna go buy it.
Exactly.
Right? It's not like that.
Process too in the
It's
diversified
okay.
portfolio. It's not just like you're owning individual like stack capital. It's like there are portfolio companies below there. I'm like, hey, I'm gonna go build my own portfolio and I have like 16 different companies in there. Okay, that's great. For us, by owning Stack, you have a number of companies underlying that. So that diversification is the risk mitigator, which is great.
And what we're getting exposure to, not just these companies, but it's the later stage companies which are trying to go public, which means they're choosing an opportunistic time to cash in, because that's why they're choosing to go public. Is that correct?
Exactly, exactly.
Oh,
We're focusing on those growth to late stage companies, not like the
okay.
early
At an inflection
stage.
points that are hard to
Exactly,
get, that are
exactly,
usually only reserved for very select few people at the very top, and even when they want it, they can't even always get it.
exactly.
Huh.
Difficult.
That sounds like a beautiful business model, Jeff.
It's not bad. A lot of people could definitely benefit by having that in their portfolio.
Okay, so what else can investors look forward to for the rest of the year?
I think in terms of the rest of the year, we're really trying to like play on like this AI theme, but like play on it like in the right manner. There's a number of companies where I'll stick to saying they're a cloud diagram on a chalkboard and they've raised a lot of money, but it's like, okay, well, I can't invest in that. Like I need something where like I know this is real business that's going to stick around. So we've been doing a lot of work on like what we would call the picks and shovels of the AI play. So we've
Mm.
really been digging into like data centers, really been digging into like that type of business to figure out where can we put capital to work in the most efficient manner, and in a manner where like we have some downside protection. There's like some tangible, I can feel that, I can go see that.
Mm,
I have like some asset value. That's what we're really been working
mm,
on. I would also sit there and say too, on like on the defense side, there's a big changing of the guard on the defense side of what's happening in the US, and you've seen it with companies like Anduril, you see it with companies like Shield AI, on how defense departments procure assets. So two of those are very interesting areas that we're looking at right now.
mm. So what I'm hearing is that, so I'll give you a pitch here too. So what I'm hearing is that Jeff and Stack Capital are always looking for new opportunities and new themes. And when you hear about it, so like when I hear, I'll leave it with my thought process because this is what I think might be interesting for viewers. So when I hear news release like Stargate, $500 billion investment, it's going to be powered by solar, whatever, I'm like, how can I make money from that?
Yep.
So my thought process is, all right, so I can either find an existing company, see whether or not now is a good time to invest, or look at a theme like, oh, $500 billion. He seems like really motivated. He's holding press conferences. He's bringing people together. He's probably going to spend some money. That's the guaranteed buyer. That's where if I'm interested in this stuff, I can still have the excitement of reading about these news releases, but the stress as an investor is sometimes the FOMO where, well, then I didn't maximize the full investment opportunity. And it's difficult sometimes to fully let it go. And this is where you can be kind of passive. You don't own 100% of your portfolio in gold just because you think the end of the world's going to happen. You own 2% of it, whatever, 1%. And then you can rebalance if you need to. You don't need to go crazy. If you're scared, you just do the right allocation for it. So that's what I'm hearing is that you're doing the research for us, and then we can hear updates about cool companies we own today, the pipeline for the future, and maybe some IPO opportunities. So it sounds like you're going to have some updates here soon, and I think our audience would love to hear from that. So thank you for your time today, Jeff.
Thank you so much for having me, and we'd love to come back soon.
Thank you. And then for the audience, please just make sure to read the description for full disclosure details. Thank you very much.